We have Srinivasan Nadadhur, who's the CFO at eClerx, to talk to us about the numbers. Q2 numbers coming out, solid set overall, Mr. Nadadhur. How does H2 look now going forward? Also, 75% of our revenue, largely, if I've got the number right, comes from North America. And we've had a big change there in terms of policy and politic. Talk to us about that.
Thanks, Harsh, for having me on the show. So yes,
Pleasure.
Q2 numbers came in pretty strongly. And we think that the long-term growth momentum continues to remain intact for the firm. There may be ups and downs in the short term, but long-term, the pipeline is pretty strong. We're seeing growth in financial services part of our business, in the customer experience part of our business. There's some ups and downs on the digital side, with fashion and luxury part of our business remaining challenged, and that's more Europe focused. But we are seeing green shoots in other parts of the digital business, which is retail, e-tail, and manufacturing and distribution. So overall, we are pretty positive about the long-term prospects of the company. With regards to your question on the change in regime, we believe that there should be no material change, because a lot of, or at least no material impact that results to ITS company. If any, there may be some positive impact, because if the president actually follows through his promise of tax cuts, then that could benefit the industry. Otherwise, we don't see any material change.
If I were to talk about margin recovery, especially when I'm looking at the numbers sequentially, from the 21% margin number, you've gone up more towards 26%. Do you believe that's a sustainable number? And talk us through why that is so, Mr. Nadadhur.
So there are some one-offs in Q2,
Okay.
because of which the numbers, the margin numbers have seen that expansion that you talked about. And some of these one-offs will go away in Q3. Therefore, we think that it will moderate in Q3 and Q4. But so at the beginning of the financial year, we gave guidance, and I'm talking about EBITDA here, of 24 to 28%. And we believe that we should be in that range for the full year.
Okay, so the contraction and these one-offs, what kind of an EBIT impact does it have? So if I'm talking in EBIT terms, you're at 22% currently, just for your context.
Yeah, so about 85 bps is the impact.
Sure, and that will reverse in Q3s, and that means your EBIT will come around, will hold up above maybe 21%, likely?
Likely.
Okay, understood. And therefore, how do you look at full year, both in terms of growth as well as margins? What is your guidance at, and what's the likelihood of you getting there?
So on EBITDA terms, the guidance is between 24 and 28, and
Right.
our guidance includes other income, whereas yours doesn't. So just to clarify that. And we think that we will be within that range for the full year. Revenue terms, we don't give guidance either for the next quarter or for the full year. So I'm unable to provide any color on that.
Right. Digital performance was slightly mixed. You expect a revival there?
We are seeing some improvement in sentiment in retail and e-tail business, in manufacturing and distribution. So we're seeing clients having access to budgets to spend. So that part of the business looks positive. On the other side, we have a fashion and luxury business, which largely serves top luxury and fashion houses, which is European centric, and that portion does look stressed.
And
so,
sorry, please go ahead.
The outlook it's mixed.
Sure. And in terms of recoveries, right? Just in terms of traction that you are seeing, the recovery of the business altogether, client delays, do you see that continuing, or do you see that ebbing? What's the trend like?
Again, it's sort of mixed. In financial markets, we're having a lot of conversations. We can see that the sentiment is positive. I think banks have also declared fairly strong results. Whereas in digital, we think decision making is taking some time. So as I said, it's kind of mixed.
Okay. And with regard to attrition, spiked up a little bit. What's the sense there?
We expect it to remain probably at this level. So Q2 generally for us is always higher than Q1, and that's because of the wage increments that we pay out, which are paid out in Q1, and then that leads to some amount of attrition. But we don't see a significant change from this level in Q3 or Q4.
Focusing on fresh hiring, how is that playing out? How's competition in that space?
It does seem that demand from other companies or other competition of other companies has increased. So we do see that some amount of attrition may be attributable to hiring at other companies picking up. We've not seen any challenge in sourcing new hires or fresh hires, except in certain pockets like analytics and technology, where skills are a little hard to come by.
And the new deal wins, do you expect a pickup second half in terms of how that's playing out?
That's actually really hard to say because the pipeline is good.
Right.
And what then affects the deal win is the time taken for companies to close and what our conversion rate is. So those two variables we don't have much of a control on actually.
And in terms of AI, is there traction on AI-related products, if at all? You have a pulse, you have a ear on the ground?
So there is some traction. Clients are quite interested in what we can do with AI. So we offer a lot of productized services in KYC, in digital operations, and so on. And we have embedded AI in some of these products and services, and that is finding a good amount of traction with clients. So we have to see what the ultimate impact is and whether we are able to sell more on the back of AI enabling our products.
Where are you investing in terms of where are you putting your free cash flow to work? Any new products, R&D that you are doing?
Mostly in analytics and technology on Gen AI. So that's on the delivery side. That's where most of the investment is going. And to strengthen our sales teams, we've invested in sales leaders across the globe.
Right. And just a quick 30 seconds. What's the unique proposition that you're trying to play? Is there a moat that you're trying to build which other companies are not able to breach?
So our proposition is basically domain-led. So the work that we do is very high complex, high domain intensity, and then we try to make productized services that make use of our people's knowledge and skills in that domain, along with a delivery backed by technological service. And that's the USP that we have.
Fair point. Thank you so much, Mr. Nadadhur, for coming in and giving us all of that perspective.